Hi, this is Zach Miller from Zach's Traders Cafe with a look at the major markets on Thursday, the 16th of June. Starting off with the FTSE 100 and mild rally here for this market. If it was really a strong situation, we probably would have closed back above 6,000 or even the 60.36 former March peak, but that remains the old support becoming new resistance. And one would really say that while there's no end of day close back above 60.36, this market is heading back down to that last February floor at 58.45. Overall, the picture here is that while we remain below 6,000, the chances of a dive to 5,500 and the floor of this falling August trend channel appear to be quite high. All the near-term moving averages are falling currently, so it does look as though we're on the edge of a cliff as far as the price action is concerned. Probably the closest example here would be the December decline, where after a fiddly consolidation near 6,400, the market then went down. But perhaps, as in that case, the rally or the decline won't last quite as long as some people fear. But messy situation at the moment and not looking very encouraging. Onto the DAX here. There was plenty of power to the downside earlier this week. We did manage to fill the second gap, the top of the second gap, 96.57, and the high yesterday up to 65. But the gap fill and then the decline were already back towards 9,500 on the overnight spread betting indication. So one would be looking for 94.84 as the initial target there. That was the April floor. And then after that, a possible move back down towards the 9,000 area, which is the floor of the February gap to the upside. So plenty of momentum here to the downside. And as in the case of the FTSE, all the near-term moving averages are falling, which, if not a leading indicator on the downside, does highlight how negative the price action is here. On to the Dow, and obviously the highlight of yesterday was the Fed interest rate announcement, or lack of it. That's led us back down to the January uptrend line that we had for the Dow, looking really for at least 17,500 to test what was the April support area, and perhaps down to 17,331, which was May support, and only really back above the 50-day moving average at 17,786, delaying the topping over or rolling over scenario here for the US benchmark. The S&P, similar situation as you'd expect. The only thing here is that the 50-day moving average is very much in play at the moment, 2077, but we closed back below it yesterday and are heading south at the moment. The most likely scenario here is that we'd retest the area of 2025, which was last month's support, and down to the 200-day moving average at 2016. Interestingly, that 200-day line still rising, but RSI now back below 50, and that is a leading indicator on downside, even if we don't have a spectacular decline as some might be fearing. For the Nasdaq, we have the support line from February still in place, just about at 4,400. It's also the area of the 200-day moving average. Likely scenario here is that below the 50-day moving average at 44.42, we're heading down to this neckline support from March at 4,300 over the next couple of weeks. RSI is also broken down below neutral 50, and that March uptrend line to leave it at 43. For the currencies, bit of a relief rally for the for cable yesterday, but still within this little range that we've got, 141 to 142, so nothing too spectacular. Little kink in the RSI indicator as well just suggests that we're gearing ourselves up for fresh losses. 141 rather is meaningful support, but below that one would expect an acceleration to the downside and a possible worst case scenario target here at $1.35, which is the floor of this falling trend channel from December. On to euro dollar, not quite as bleak here. Still in this range between 112 and 114, so either trading the range or waiting for a break is probably the best way forward. RSI neutral at 50, not giving us much of a clue there either. But obviously the position here appears rather more constructive than at cable. Finishing off on the currency front with the big mover, the big overnight mover. We were suspicious of support coming here towards 105. 105.55 was the old May floor, so we've broken that quite comprehensively. Probably the situation now is that heading towards 104 as the minimum on the downside, and below that one would expect this market to go more into a free fall situation, but there is at least some initial 104 support here from this line in place from February. On the gold front, heading towards that key 1300, in fact breaking that key 1300 level now, which was expected once we broke back above the 50-day moving average. Decent end of day close above 1300 should take us up to the top of that rising trend channel from January at 1350. The exact level 1303, so end of day close above that old May resistance should be enough to give us our big target towards 1350 over the next couple of weeks. That's it from me. More updates at the same time tomorrow.